Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today I want to talk about the top 3 stocks to watch in 2021 and I should say the top 3 undervalued stocks to watch in 2021 because I will talk about 3 stocks undervalued in an overall very high priced and mostly overvalued stock market right now. And therefore, as always here on the channel, it's all about the intrinsic value and calculation of the intrinsic value. This I will also do with the 3 stocks I show you today or talk today about. I will show you the stocks, say something about it, and then also calculate the intrinsic value, and also will try to explain where you can find the informations to calculate the intrinsic value. And the whole idea of the intrinsic value calculation, of course, is a guess. Is the best guess we can make by the earnings, by the future growth, and then try to calculate the intrinsic value. And so I come back to a quote from Warren Buffett: "It is better to be approximately right than precisely wrong." And that's all about just make a good guess, and then of course with a margin of safety try to buy good businesses. And the first business I want to talk about today is T. Rowe Price Group. Another video where I looked a little bit deeper into this company. You find the link here up on the screen. And T. Rowe Price Group right now is traded with a market capitalization of almost $35 billion or a stock price of $154, with a PE ratio of 17 and a forward dividend yield of 2.33%. So also quite a good dividend stock. And on this example, I want to show you how to calculate the intrinsic value and where to find the information for. And therefore, I take since a few weeks this Excel sheet from the very great Sven Carlin. I highly recommend his channel. I put the link down in the description, and you also find there a link to this Excel sheet, and you can download this for free from his website. We see here 3 scenarios: normal case scenario, best case scenario, and worst case scenario. And the informations we need to calculate the intrinsic value is first of all the current earnings per share of the last 12 months. And to get that, we can go to macrotrends.net. This is a website I use normally for that. And I also put the link in the description down so you can find it very easily. And here we see for T. Rowe it's $8.92 in the last 12 months. And so we put this here into the earnings per share. And then of course we need also the growth rate to calculate the intrinsic value. And a very good site to find the estimate growth rate for the next 5 years at least is Zacks. I also put you the link of this website down in the description. It's not the only website where you can find the estimate growth, but for me it's one of the better ones. Also in Yahoo Finance you find this information, and then of course you can double check somehow. And here we have for T. Rowe, for example, an estimated growth rate for the next 5 years of 8.4%. So just to be a little bit conservative, I put here in the normal case scenario for the next 5 years 8%, and then for the years 5 to 10 6%, because maybe the growth will slow down a little bit. And then another thing we need is a discount rate. And the discount rate is just your expected return. This is just the return you want from your investments. And for me personally, this is in almost every case 12%. And to finish this calculation, we need the terminal multiply, or the PE ratio we think in the future. And of course, this is also a guess. And so maybe the best way is to look to the past and see what's the average PE every stock is traded at. And also therefore I like to go to macro trends, and when we look here in the past we see that T. Rowe normally is traded let's say around 10 and 20 in the uh, price earnings ratio over the last decade or so. And so for my calculation, for the normal case scenario, I put in a terminal multiply of 15, and then I come to an intrinsic value of 151. And then at scenario 2, at the best case scenario, of course the EPS is just the same. The growth rate is just a little bit higher at 12% for the first 5 years and 8% for the second 5 years. And the terminal multiply go up to maybe a high range of 20. And then we come to an intrinsic value of 222, and that makes some sense because, of course, in the best case scenario, the value should be higher than in the normal case scenario. And because we also have to look at the worst case scenario, uh, also here the EPS is just the same, but then of course the growth slowed down 6% for the first 5 years and 4% for the years 5 to 10, and with a terminal multiply of 10, which is in the historical lower range. And then we come to intrinsic value of 110. And so we have the three scenarios and the three intrinsic values in the scenarios. And then we have to look how high is the probability. And here I said for the normal case scenario, probability is 60%, and for the best case and worst case scenario, each 20%. And if you calculate that, then you come finally to an intrinsic value of $157. And this is just right on the intrinsic value. Because just remember, right now T row is traded at $154. And so right now you can buy it on the intrinsic value, and so a little bit under that. And so for me, it's a very interesting company because they are highly profitable, great business model. I really like this company, this business. It's just a little bit too expensive to me because I like to buy my shares with a high margin of safety under the intrinsic value. And so when there will be a margin of safety of at least 20%, even better if it's higher, then I really think about to build a first position in T row. Really a great, great company. Just look at it, analyze it for yourself, and then come to your own decision and also calculate your own intrinsic value, of course. Number 2 today is Alibaba Group. I just recently made a video about Alibaba Group, and of course the business model and the financial numbers, and came to the conclusion that this is a great, great business. And of course, because of the political influences and all the surroundings around Jack Ma, there is a kind of a little crash in Alibaba stock lately. And so the question became, is it maybe time to buy into Alibaba? And right now, Alibaba have a market capitalization of 625 billion with a PE ratio of 25. And you find my deeper analysis of Alibaba just here up on the screen. Feel free to find this out. And also here I made the intrinsic value calculation. You see all the numbers here. Again, the EPS of the last 12 months, then the growth rates, the terminal multiply for the normal case, best case, and worst case scenario. And when we calculate this together, then I come to an intrinsic value of 357. It's way undervalued because remember, the price is just around $236 right now. And so, of course, under normal circumstances, it would be a clear buy, a strong buy, but with the political problems and uncertainty in China, I'm still not ready to buy into this great company. As I also said in my other video about Alibaba, I will take a first position when Alibaba will go under $200, because then we have really a high margin of safety, and I really want that with this high uncertainty in China at all, and in Alibaba especially right now. And last but not least, number 3 of the stocks to watch, the undervalued stocks to watch in 2021, I want to talk about TD Bank, or the Toronto Dominion Bank. One of the biggest banks in Canada, and you should take a look at all of the banks in Canada. You maybe know that another bank of Canada is in my portfolio and is the biggest position in my portfolio. Check this out. You find a weekly insight to my portfolio just on my channel. Here on the screen you see the latest insight of my portfolio from last week. And this is the Bank of Nova Scotia. And all of these Canadian banks are very, very, very solid. And so also the Toronto Dominion Bank, or TD Bank, is just a great company and a great business, and have a market capitalization right now of 105 billion with a P/E ratio of almost 13 and a forward dividend yield of 4.18%. And I also calculated the intrinsic value for TD Bank here. And again, just the EPS of the last 12 months first, and then the growth rates and the terminal multiply for the normal case, best case, and worst case scenario. And then I come to an intrinsic value of $60.73. And this means that TD Bank right now is just 13% undervalued. And so also you can take a look here. I think in the long term, you can't do anything wrong with that. For me, because I have Bank of Nova Scotia, Scotiabank in my portfolio as my biggest position. I also have Wells Fargo and JP Morgan as US American banks in my portfolio. I will not buy into TD Bank right now because I'm just high weighted in the bank sector already. But of course, when we get a correction or crash like this, TD Bank is also way up on my watch list. And so I think if you are not already invested in the banking sector, this could be a very good long-term investment with a good high dividend yield, and quite safe because the Canadian banks overall, and TD Bank especially, are really solid in the financial numbers. So that's it for today. Thanks for watching. If you liked the video, please subscribe to my channel and follow me on my road. And if you really like the video, please give me a big thumbs up. This helps the YouTube algorithm a lot. Ring the notification bell to never miss another video. And then we will see the next time with another video. I think tomorrow I will give you my weekly insight to my real money portfolio. See you then. Take care. Bye bye.